Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is February 13th, 2024. This is the morning Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. We just had CPI come out stronger than expected, and that is sending the dollar shooting to the upside. What has it done to the technicals? I will take a look in this video. We'll start by taking a look at the euro versus US dollar on the hourly chart. The high price just before the U.S. CPI data moved up to test the 50% retracement. I'm actually going to go to the 4-hour chart to show you where that level comes from. And if you go back in time and take a look at this low right here, going back to October to the high price that we saw in the month of December, the 50% retracement comes at 1.07936. I spoke about that level in yesterday's video. The 100-day moving average was at 1.0782. The 50% retracement at 1.07936. We need to get above both those levels to increase the bullish bias. And the price that tried to go above it just before the number, maybe sellers leaned against that level, taking some profit. Those who did are going right now. And the price has since rotated to the downside. Might as well stay on this chart because you can see the 1.07224 level. That was the low price that we saw in trading last week, not once but twice. That level also corresponded with this low right here and roughly with this high right here. So that was another level that we need to get to and through, and we are now below that level after initially testing that level soon after the number. We more recently broken below that level. We're also below the 61.8% retracement at 1.0712, currently trading at 1.01. Right around that 61.8% retracement level, as a matter of fact. Close resistance is going to be at the 1.0722 level. Or a more conservative risk level might be this 1.0741 level. That level corresponds with this low going back here, and the more recent low from trading last week. These levels right here, and right here. So if the price were to stay below those levels, the best case scenario would be staying below the 1.072223 level. If we can do that, then the downside remains the path of least resistance. This would be the next target for the pair. You can see the number of different swing highs and swing lows in this area between 1.0655 and 1.0675. Move to that level. We should see some stall in the fall. But that would be the next target for this currency pair. Let's take a look at the dollar versus yen next. And again, we'll look at the hourly chart, and you can see how the price in trading here today tried to move above the high price from last week, but then rotated back to the downside, closer to the 100-hour moving average before the data, and the data shot the price to the upside. And take a look at the 4-hour chart to get a better view of this, and you can see that the price has moved above this holds a swing area through here. Going back in time, you can see the number of different times. You have to go all the way back here where the price tested this area. It didn't extend that, but you can see we're above that area between 150.03 and 150.11. Currently trading at 150.40. And the next target comes in at 150.72. Taking a look at the daily chart, we're also above this swing area here. Maybe this is a better view, a better level to watch. 149.70 up to 150.15. That level corresponds with the number of different swing highs through here. You see all those levels through there. Traded a little bit sloppily there, and then tried to hold support there before moving below level and using this level again. So 149.70, 150.15 is now support for the dollar versus yen. Stay above that area, and the bias remains more to the upside with the high price from 2023. Also going back to the 2022 high near the 151.91. That level is going to be a key level on the top side, and the next target on this pair, really off of this daily chart, that is going to be a key level as a double top for 2022 and 2023 come at that level. Finally, let's take a look at the sterling versus US dollar. I'm going to look at the 4-hour chart, and we know the story of this 126 to 128 level for this pair. I'm going to put the box around it, and you can see that the price has moved now below that the low of the swing area between 126.02 and 126.137. If we stay below 1.26137 and you're bearish, then the price should continue its move, or you would look for the price to move down toward this area through here, this yellow area through here, which is not only a swing area but also home to the 200-day moving average. It's a green line in this chart, currently coming at 1.2363-ish type area. That's a key 2563. That's the key level on the downside. So watch 126 to 126.13 for resistance sellers in the sterling versus US dollar. Stay below that level. Keeps the bears firmly in control. So CPI data was much stronger than expectations, and that has interest rates moving higher. By the way, the 2-year is now up about 13 basis points. The 10-year is up about 10 basis points, and the stock's moving lower. The S&P is down minus 60 points in pre-market trading. Dow Industrial Average is down minus 335 points in pre-market trading, and the Nasdaq Index is down close to 300 points for that index. Remember, yesterday the S&P and the Nasdaq Index both moved to above the previous all-time high closes, but failed, and that is going away technically for those stock indices. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.